Dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing, but everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now, and I really can't see how this one's going to be resolved without many eggs being broken.
In today's news recap, gold price races towards $4,200 on Tuesday. The gold price hit another new record today, and Goldman Sachs has raised its 2026 forecast to $4,900 per ounce. The gold price smashed a new high on Tuesday, trading at an intraday peak of $4,177 per ounce at the time of writing. This new record comes less than a week after the gold price broke through the $4,000 mark for the first time in history. The gold price is now up 59% in 2025 alone. The rising gold price continues to push ASX 200 gold shares higher, the S&P ASX All Ords. Gold index rose 2.9% on Tuesday and is now up 20% in the past month and 102% in the year to date. The Northern Star Resources share price is up 62% in the year to date. The Evolution Mining Lilty share price is also up with a measly 135% return in 2025. Newmont Corporation shares finished higher at $138.99, which is a 131% increase in the year to date. Analysts at Trading Economics said investors were ramping up safe haven buying amid the U.S. government shutdown, renewed U.S.-China trade tensions, and increased expectations of U.S. interest rate cuts. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Whether you're even going to get the liquidity over there. I mean, basically, the history, if you like, the more recent history, following our very successful gold standard, back in the 19th century, the history of the 20th century is that central banks grab the gold and they won't part with it at all. The idea that they're actually going to go on a gold standard and, say to all comers, we'll exchange our currency at a rate which is as follows, and if you're not happy with our paper, then come and exchange it. I think we're an awful long way from returning to those days. You're not going to get liquidity being released from the market. I think that's the key thing. And the reason I mention household savings is that, these guys are just as human as you and me. They see something going up and they chase it. They're not going to say, oh, thank God, I could make a bit of a profit here. Unlike some of our Western investors.
Yeah.
Take a rather different view. Just let the figures sink in for a moment. If you're talking about 30% household savings rate, you are talking about $5 trillion a year seeking an investment.
Mm-hmm.
How do you accommodate that? The Chinese economy has been growing pretty well. I don't buy into government analysis of these things and macroeconomics. It's a load of rubbish. It gives you no idea exactly how things are really performing in China. But I'm sure that some of that would be in capital investment. Is bound to be. Because the economy works there. It works pretty well. Much as our analysts, macroeconomic analysts in the West hate it, they hate this proof that they're wrong. But what the Chinese are now doing, and this is fascinating because having cornered the market, they're now saying to their friends, that's not us, by the way. I'm talking about the Shanghai Cooperation Organization and also BRICS. saying to them, look, we're opening vaults, SGE vaults, Hong Kong, Saudi Arabia. I heard, I saw something yesterday, India. I can't substantiate that, but it wouldn't surprise me at all. And also throughout Southeast Asia, there will be exchange facilities whereby you can swap Chinese yuan for gold and vice versa. The only thing we don't have is the rate at which it might be fixed in the future. But you can see that they're setting up a network, if you like, for governmental settlements. This is not going to be available to citizens, I believe. I don't think so. I can't see it. But it will be available for governments settling their trade imbalances. And I think the point about it is that it will make the yuan attractive, if you like, as a foreign currency. The other thing is that they are setting up a process whereby if you're going to, let's say, sell South African rand to buy Indian rupees, at the moment you have to sell your rand to buy dollars, sell the dollars to buy rupees. They're cutting that out completely. This is going to release foreign exchange commitments, which, according to the Bank of International Settlements, they reckon is around about $80 trillion. We're talking about the dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see how this one's going to be resolved without many, many eggs being broken.
In today's news recap, gold has hit peak trendiness, analysts suggest. The record gold rally of the past few months may have peaked in trendiness. A top investment bank has predicted, despite the precious metal hitting fresh highs on Monday, fueled by Donald Trump's threat last week to upend trade with China. Deutsche Bank said that while it was not predicting an impending correction, the length and intensity of the yellow metal's upturn has made a period of more neutral behavior more likely. The gold rally of September-October may have peaked in trendiness. Deutsche Bank analyst Michael Shuey wrote in a note, trending episodes have lasted on average for 19 days in the past 3 years. So the current episode of 29 days and counting is longer than median and average. Fears over Western governments' ballooning debt piles and a flurry of political crises helped carry the price of gold past $4,000 per troy ounce last week. Little more than 6 months since it cleared $3,000 for the first time in March. The spot price of the precious metal, a safe haven asset traditionally used as a hedge against inflation, has risen more than 22% since August, alongside striking gains to Bitcoin and other cryptocurrencies. The rally has been dubbed the debasement trade by some because of fears among investors that governments will look to devalue their currencies as a means of inflating away debts. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
Because really what we're looking at is the demise of the paper system. Because people are beginning to understand why you should hold gold. And as I say, China has basically cornered the market. Call it the physical market. They've cornered that in effect. So where does that leave paper? Well, I mean, paper's just a bunch of promises with nothing to back it. It's not gold. It's credit. And, it's credit which, so long as the counterparties are solid, then you could say that the paper is a gold substitute. But when we see the fiat currency system coming under huge pressure and looking at the end of the whole fiat currency system, then all these paper promises are going to turn out to be worthless. when I was talking about the World Gold Council, I was slightly amused. I mean, I think they've rather lost the plot. Either that or I've lost the plot. It's quite possible. I think what basically, they've been working with the LBMA to get every bar registered, and this is just PC stuff. I mean, what's China going to say about this? I think there's an old-fashioned Churchillian expression, something like that, but the other way around. And where's all the gold? Well, it's flown. And then the latest thing was the World Gold Council saying we're going to digitize it, which I think is a sort of buzzword, and I sort of think, they really haven't got the plot at all. The idea of digitizing it, I mean, but you see, to be fair to them, they're looking at a market which is exclusively the investment management industry. And so, they're trying to think like investment managers, which is the wrong way to think. I mean, they've missed that boat completely. So I think the whole thing is that it's a bit of a farce, really. I mean, don't get me wrong. I do like a lot of what the World Gold Council does. I mean, particularly its work on statistics and things like that, which we know are incomplete, but their statistical stuff can be extremely useful. For example, they collect very detailed statistics on ETFs, that sort of thing. They're also, now that you can't get daily fixes without having to pay some horrendous amount of money to someone or other, they've stopped even doing that. But you've still got prices going back to 1978. I actually managed to go back further than that, but that's because I'm a bit weird, I think. But it's our institutions. I mean, the broader point is that our institutions are no longer fit for purpose in this market. And anyone who's guided by them is making a horrid mistake. I really do think so.
What do you think of Macleod's take? Will gold continue to rise in the fourth quarter of 2025 and beyond? Are we approaching a major top in the global markets? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you, and I'll see you on the other side. Thanks for watching.